Right, so welcome to everybody on the call. Thanks for taking the time out to jump on. For those familiar with the DTB system, you know what you have. For those who would like more information, you can review the website. We've got a lot of actual videos on there that help understand the system better and what actually makes up the system. And some of those things we'll be covering on the call. So that is the risk disclosures for trading. So review those. A link will be in the video as well. Okay, great. So let me jump straight into the charts of what we are looking at. So what I have done for this session is I've actually done a strategy analyzer. We don't have to watch that the live trading chart so much at this moment. I've got a strategy running at the moment. So what I've done with the analyzer, and the beauty of this is you can basically optimize any instrument that you would like to, as well as any time slot. So we currently have, we're using the 9 a.m. to 10:55 a.m. time slot, for this session. And we are optimizing the NQ. And what I've done with this specific optimization is I've analyzed the last month's worth of data. So if you look at the dates there, it's 22nd of August to the 22nd of September. So it's an entire month's worth of data. And I've used a 32 bar. So I went and actually used a few different bar sizes. So you can go and customize and update these and change values over here to any different values that you want. And whatever value you put in there, just use a 3 slippage in your strategy. And what that does is it basically just gives you an accurate representation of what the price is actually doing and how the trades are entered. So if you look at the charts tab, you're going to see the trades entered will actually include the slippage and the commissions and everything. So the summary of results will always cover the commission, obviously the values, the drawdown, and the rest of it. Now, I applied the best setting that I found in my optimizer to today's session, and I started it at 9 a.m. And so it's only taken one trade so far, and that is the position of that trade. So, I mean, you can also go and set up in your strategy settings, you can set up a daily target. So if you want to select a $500 daily target, you can put that in there. 1,000 daily target, whatever value you want to put in there, you can actually select that, and the strategy will automatically pause when it hits that value and it won't enter any more trades. So just on the last month's worth of data, these settings have given the best results. As you can see, like the 16,600 with a 48.98% accuracy rate with a 2,477 drawdown. So that is what this strategy has basically done over the last 30 or the last month's worth of data, which is only about 20 trading days or 18 trading days, however many that is. So that is the benefit of using the analyzer. It's giving you the highest probability of success. Now, it's also not taking into consideration the different, it's not taking into consideration the Fibonacci levels and things like that. So when you are manually or when you are monitoring the strategy itself, you can go and pause the strategy at different levels if you wish. So you could be in a trade, and if you specifically want to monitor it, you can do that. You can also obviously activate a trailing stop where you can manually adjust your stops and targets. So that is something that you can have more control of while the strategy is running itself. So just a bit of back end on this. So these are the positions that the strategy would have taken yesterday had it been active. So You can see, some losing positions, some where the price has run down a little bit and then gone up, a bit of bouncing around. So it's not always going to pick the tops and bottoms, obviously, of settings, but it's going to, over the history of the last month, it has given the best settings. And it's only trading between 9 a.m. and 10:55 a.m. So those are the only times the strategy is running. So, and sometimes it definitely is going to take losing positions. Like, for example, there was a long position, and this long position, I'm just going to see it basically, price went up and it came down and switched over. So you're going to have times where you could have a 70, 80, tick type of a run where it's going to go against you. But overall, based on, the history of what the strategy has been doing, these long running positions are the ones that have really, made the strategy profitable, because it's not acting on stops and targets. It's only acting on continuous trading. So this is a continuous trading approach where it's only acting on signals reversing or signals changing. So no stops and targets are used in the strategy. So if you manually want to have stops and targets, you can go and use your trailing stop like we mentioned, and manage your stops accordingly. So so that's what this is looking like. Now, it'll be nice if every single day this could happen, where you start a strategy and it immediately puts you in high profit, but it's obviously not something that is, that's not the real world that's going to happen. So, just bear that in mind as well. We are dealing with trading after all, and we're dealing with hundreds and thousands of different banks and institutions and individuals around the world who have got their own idea of where price is going to be going. But we definitely do have a few tools up our sleeve, like the Fibonacci levels, which we've been watching very closely on our calls and seeing how those levels come into play. Okay, so that is the 32.32. Now, this month's worth of data. So if I go and run this optimization that I've selected here, and you guys have got the template for, if I go and run this, it's only coming up with 800 iterations. So as you can see, even though it's taking a month's worth of data, it's running pretty quickly. Now, obviously, the more times you run it, because it's already got that data stored, it's using that same data. So the very, very first time you run it might be a little bit slower. But, that is what it's done. So if I look at this at the very last, if I look at the strategy now and I look at the trading chart, notice how the optimizer is pinpointing the exact location of the trade. So if I go and just do this, if I click on this button over here, which is, the crosshair, and I'm doing the same on my analyzer chart, I can basically pinpoint exactly where that trade, according to the analyzer, has entered. And you can do that for any trade in the history of the strategy analyzer, and you can compare it to the trading chart. So it's very important to compare your trading chart to your analyzer to make sure that those positions that the analyzer is showing you is matching up on your trading chart. So as you can see, all of those are matching up perfectly. The bottom chart, the bars are a bit smaller, so let me make it a little bit bigger. But notice there, so you look at the top chart, I'm moving on the bottom chart, and it's plotting those positions exactly where the price would be should that when the strategy takes its position. Now, it's also taking into consideration slippage. So that's why it's very important to put slippage in to the analyzer. Now, it's not always going to be 100% accurate slippage, because NinjaTrader just has a little bit of a bug in that sense. But when you add your slippage, it's going to most of the time include that in the results and be very, very close to it. So if you look at, as an example, at that entry location for this trade, it is 115.05650. Look at this one over here on the top chart. Let me just get this in there. It's going to be a bit challenging. 15.05650. Okay, so there it is over there. 15.05670. Oh, well, it's basically showing there, you see. So it's actually giving you, it actually gave us a better entry on the trading chart than what the strategy analyzer said. So basically the analyzer is saying that the entry was one tick lower than what the actual trading chart had entered. So there we go, one tick in our favor from our trading chart compared to our analyzer. But it doesn't always work that way. It could work one tick the other way. But if I put zero slippage, so if you look at these results here, okay, now notice those results, and if I had to go and put zero slippage in here, you know, that's going to give much, much higher results in the optimizer, but those are not going to happen in the real world. So we'll just run that. Unfortunately, it runs pretty quickly, so it's good to do that. So that's why it's vitally important that you always use your slippage when you are doing your iterization. Look, that jumped from you know, to 19,000. So completely unrealistic, and it didn't include the slippage on that last order. So with the analytical bars, with the DTB analytical bars, you know, this is the most accurate tick bar that you can use. So the benefit with this bar is there is no false open. So there's no tick offset or anything like that with this bar. So that's why you can comfortably always use a 3 slippage on this, and you'll be set. Okay. Now this specific strategy that we're running over here, because it doesn't have a lot of entries, you could have positions running for an extended period of time. And you also may have positions that are running in a profit that might end off at break even, or might even go into a loss. Just because we've only got 99 trades over the last month worth of data. So even if you look back on the, you know, on the analyzer chart, if I just scroll back and I just look at the previous entries, we'll see. We'll just see if I can pick up anything like that. So, like as an example, there to enter the sell, the price came down, but then it went into a loss. So that is, you know, what's going to happen on any strategy. So don't be absolutely alarmed by that, but you just need to make sure that you haven't got long running positions that are in the negative. So with this, it should only be about 2 or 3 bars where it will switch over the signal, but it's been fairly consistent. If you look at the actual drawdown, the maximum drawdown over the period, it has been fairly consistent with not having long running positions. So like there's a beautiful example. Not that it's beautiful to look at, it's a bit frustrating sometimes if you're in a trade, but like as in this example here, the trade went up 165 ticks, but then actually ended up being almost a break-even trade. So, you know, that is what happens in the world of trading and strategies. I mean, there's quite a few things that need to be falling into place for the strategy to make its decisions. So, you know, when you're seeing those price reversals and you're seeing how, you know, winning trades can go into losing trades, there's a few aspects that had not fallen into place. And, you know, even though it might seem, you know, an issue at the time, overall, if you got the right settings and you got a good heartbeat of the market, you're going to have these long running positions that are going to completely make up for everything. So something to keep in mind. And again, because of the control that we can have of being able to pause the strategy, so you got the option to pause the strategy whenever you want to as well, to capture profits. So say, for example, the price is at a very strong Fibonacci level. You can pause the strategy, capture what it has, restart the strategy, and it will act on the next signal. So that's something to look at. But you also don't want to be doing that too much, because, as an example, if you had paused the strategy when the price was breaking above the 38.2, then the price has broken down, and then you would have missed out on a huge run over there. So be a bit careful, or be a bit just be mindful of controlling the strategy, where it actually kind of knows more than what you would know generally about when to take positions. And I think the whole idea is trying to get into automated so we can not, or take out the frustration or the emotion out of our manual trading. Let me just see. I just want to check something. I'm going to just stop my video because it's taking some of the screen, and jump back onto there. But for most people, they'll be very, very happy to have a $500 session and literally be done in 10-15 minutes. Well, we actually, this strategy actually started at 9 o'clock. So most people, if they're seeing themselves in a good run, and they've got an idea of where they want their goals to be for the day, you can actually be done by this time already. So that was the whole idea too, was trying to find a strategy analyzer, or finding strategy settings that is going to give you the best probable outcome. Let them run, hit your target, and then be done with that.
Just a quick question here, Jason, because obviously I'm just changing around with the bar size and stuff. I've gone to a 16-16 and just basically optimized the last 2 days, but I'm still getting 800 iterations. Would that be correct?
Yes.
Or should I be looking to take more with it being a smaller bar size?
Oh, no, the iterations basically has to do with the parameters of the strategy. So not the bar size. So with the iterations is basically comprising of a few things. So the iterations, what that is combining is, if you're using stop ticks and target ticks, that's going to count all the iterations of those, but we're not using them. It's going to be using, if you're using the trading stop and target ticks and you're doing a minimum and maximum value, it's going to be you counting towards those. But when you're not using any of those, the iterations is going to include the setting A, the setting B, so the value between those, and your optimization. So these are the 2, 3, 4, 5. These are the 6 values over here, which is combining the 800 iterations. So as soon as you increase any of these, it's going to give you more. And obviously, if you decrease, it's going to give you less. So remember, when you've got it optimized as a repaint, what's going to happen is it's going to run a test for true, run a test for false, and run a test for optimize. So that's going to add 3 times the amount of results than if you were just having that as true or false, for that matter. Okay, so that helped.
Yeah, sorry, yeah, I forgot it's down to the A and B settings. Obviously, if you make them bigger, it's got to run more calculations. Yeah, thanks.
Yeah. Okay. Now, for the session that we are in right now, you can, now that we've run the month's worth of data, if you wanted to run today's data or a smaller sample size, you can also do that. Now, bear in mind that when you do that, it's going to optimize and analyze different data and even a shorter range. So it's going to give you the best settings between that shorter range. So just bear that in mind. So if I go, for example, from today's 22, Wednesday, to 22 and I run the exact same settings, it's going to run obviously very, very quick, but it's also come up with, a similar, setting that it's in a cell at the moment. So it's only going to be optimizing today's data and it's currently in a cell. You can look through the settings. There's a few other little settings over there where it's taking more up and down positions. So it's taking, these type of situations over here. So you could also have run optimization just on today's data, and it would have given you these settings to use. So taking more in that. And you can also run, now notice we had 800 iterations. Okay. Now, if I wanted to check what reverse would do, and I tick the box for reverse, it's going to double that, because obviously it's going to run all the trades on trend and all the trades on reverse. What would have been the best setting? So that's something you can also do. And if you notice, from 9:20 or 9:30 up until now, the price has been zigzagging in a small little range. So if you look on the trading chart, you're going to notice how the price has been basically zigzagging in this area over here. So obviously, if you are selecting reverse as an option, it's going to give you all these trades that would have been effective in reverse. So another thing you can do is run reverse. Now, that reverse is not going to be great when the price is running off in a direction. It's only when the price is consolidating. And this might even be an option to use when the price is between two very strong Fibonacci levels, as an example. So that's another option to use. Now, also notice that the plotted trades on the analyzer are including the commissions, or the slippage, should I say, and the commissions. So the sell is obviously a little bit lower than the buy, so it's gonna put it in there. So if the trades were entering on a live chart, this is exactly where they would enter on that live chart. So it's just a good way of doing that. So either way, you can run whichever bar size you want. You can run reverse trend. And, again, you might only need to have 2 or 3 trades running in your favor and you've hit your target for the session. So that's the beauty of the strategy and all the different things in it to be able to give you more chance of success by using different methods of running it. Okay, I just want to check if I have got this video running. Okay, a little bit of a delay on something over here. I'm not sure why. Okay, good. All right. So we'll just continue run the optimization. Now, you could also choose what you want to do with the other strategy. You can pause it, and then you can start running your local daily optimization. So you might want to choose to change it according to what the price is doing now. So you may have had an initial nice run on the strategy, and we paused it at a level and then run it, or just let it continue for the rest of the session. So whatever you want to do on that. I'm going to just do something on the back end very quickly. If you give me a moment. And how are you guys going with your strategies? If anybody wants to jump in and just see what's happening on your side.
I got the same trade that you have going on with the NQ, but I also ran it on the micro, but it hasn't initiated a trade. But
yeah,
right now it's going good on the NQ.
So did you do the optimization on the micro also, or did you just use the same settings?
No, I did it on the micro as well.
You optimized on the micro? I mean, did you run the optimization on the micro also?
Yes.
Okay, good. So that's a very important thing to do as well, is always make sure that you are running the optimization on both, because even though it's still the NQ, the price action is very different on the micro compared to the mini. So you still need to run that optimization in sequence there. So I'm just busy popping something on here. Okay. And also just looking at, so I've got like a trending and a flat baseline chart also. Well, I've actually got a flat baseline chart. So this is basically the price moving around a baseline. Now, I've got two different flat baseline chart. The one is the analytical bars and the one is the DTB bars. The DTB bars is the one that I like to use for the longer term price movements, because I know exactly where these baselines are going to be forming. So that comes into effect. So we often have, we've had the price actually break through the 38.2 and stay above. So that's not looking brilliant for that to be coming back to this baseline. And we've actually had a signal on this trade, a reversal signal. So this price is breaking, it's just broken up to a new baseline now. So this is another thing to look at is a longer term chart. Now you can also go and change this to any size chart you want. So if you want to go to a 440 chart, is going to give you a much larger perspective of the market of a longer period of time. So basically that's taking into consideration 440 ticks in either direction. And that's about what our, if you're looking at our daily range and things like that, this is going to give you a good perspective of where price is likely to be going back to or moving around. So a good thing to look at, and often you can find that the price can run these baselines for extended period of times. So it's something to look out for. Okay, I'm going to pull this aside. And I'm going to run this optimization. So I'm going to run this optimization on this chart and just see what it is giving me for today's session. So this is today's data. Okay, so now the trend settings have taken over as the best settings. So notice how that signal switched over at 15.025. So you could be running your optimization, and if you are in a position running your optimization and seeing where the latest settings are giving you that turnover in price. Could also be a time where you can pause your strategy if you're in a longer position and then switch over to a different set of settings, or at least be out of a short trade if you see that your optimizer is telling you that the current best settings are showing that you should be in a long. And this came all the way at 9:45. So looking at this, now we haven't been managing this top strategy. So there we go. This trade actually came down, hit the 76.4, bounced off there, and ended at a loss. So that is what happened on this one, which is similar to what happened before. But at 9:45, which is over here, it actually gave us a signal on the current settings for today that was a reversal point. So that is another way of being able to control the strategy too, of capturing some of the profits. And that's if you are able to actually monitor it. You know, if you're actually in front of the computer and you're monitoring what is going on. Okay, I'm just busy checking on the. Okay, that's fine. So it's running. The video is running in the background. Good. So, like there again, you know, we had over $500, or actually went up to $700 in profit. So that could have been an option to pause it, capture the profit, wait for the next signal. We're back at the 38. You know, so this point is a contentious point. So if this price breaks below the 38 now, the bar breaks below, you could decide I'm going to pause this because the 38.2 seems to be a point where the price is going to resist. So you've got to really monitor what's happening with this bar and see, is this price going to break through? It'll be nice if it does, because then there's a good chance it's going to hold above that. So this is why it's good to have your either have your trading stop active, which is this one here. I've only got a 40 trading stop. You probably need a larger trading stop on this. So you probably want to have like a 64, like 2 bars worth of stop. So you can change that in your settings, in your optimizer. Even though you're not using them, you can still put them in your settings. And at least if you do activate your trailing stop, it will hold those specific settings. So notice now we are right between a strong Fibonacci level, but also a weaker one. So the 23.6 is the 5-minute Fibonacci level. So you can bet that if this price had to break through here right now and stay above, it's got a huge gap above in the price to the next Fibonacci level. So there's the next Fibonacci level is the 50 way up there. And that 50 is the blue 50 is the weekly Fibonacci level. So not a lot, there's not a lot to stop this price from going up, not a lot at all. So that's why very often in situations like this, you can see a run of the price because there's not a lot of roadblocks in its way. And this could also be a time where you can say, you know, I'm going to enter some manual trades. So if the price comes and retests that 38.2 and bounces off, you can say, well, I'm going to take manual trades up again, because that's shown to be a very good support for the price. So earlier over here, you know, when the price was struggling to find a direction, could have been a good chance to pause that, especially when it failed at the 76.4. I wouldn't have really stopped it at the 50 because that is, you know, only a 5-minute Fibonacci level. But the 76.4 is the hourly Fibonacci level, so it's a stronger level. So yeah, so that could have been captured over there. So this very often happens. The price will break through a very strong level like it has. Okay, it will entice a lot of buyers. A lot of buyers will be jumping into the market. But then what the banks do is they just bring the price back down again to take out those stops. And we're looking at 64 ticks of, I mean, it's 64 ticks. And more than likely, if you measure the distance between the high of this and the Fibonacci level, that is 94 ticks. There's very, very few people out there who are going to have a trading stop of 94 ticks if they're doing intraday trading. So most people are going to be trading the price by, you know, 15, 20, 30 ticks. So all these stops are being taken out right now. They've sucked people into buying. They're coming down to take out stops, but they're more than likely not going to break through the Fibonacci level because they've identified that as where they want to, you know, that's the level. They know if they break below that level, then the price, you know, then they're going to have to go down. So they came very close to it over there. So another good thing you can do is you can say, well, you can take little manual scalping positions to follow this trade when the price comes close to the Fibonacci after a breakout, and enter positions and then run that price up. Even if it's for one candle, you might just do an extra candle. Now, we did have before where they actually broke through and then came back down below. So you kind of have got to have a few different things in mind that, you know, we've had a kind of a false breakout before. You know, was that enough for them to not do it again, or are they going to do it again? But I would definitely say that if this price, if a bar closes below the 38.2, then you would definitely exit any long position. So right now, all they did was they came down, took out some stops and said, screw you guys, let's fill our orders, and bam, bouncing the price up. And now they've already gone up 50 ticks since they did that. So since they came down, which is over there, and where the price is now, it's 63 ticks. So those are little scalping opportunities that you can even take in to say, you know, I'm going to enter as the price is coming back down to the Fibonacci level, and then I'm going to put my stop where the price would need to go to form a bar underneath that Fibonacci level. And of course, you could do this on any size chart. So you might even decide to look at a smaller chart. So you might say, you know, I'm going to look at a smaller chart. So I've just duplicated that in a new tab, and I'm going to make this let's make this an 8 and an 8. Very small, but you know, we can look at that. I'll use the same date range, but let's look at the 8-8 as an example. So this is going to show us obviously a more granular type of a look, but you can say, you know, there's the price breaking above the 38.2, coming back down. You could enter, you know, right near it, and then have a smaller stop of over there as an example of a bar closing below the 38.2. So just a few little things you can do if you don't want to have a much larger stop in place. So there, even though we've had a position that went up to $700 in profit, closed off at a small loss, our next position has more than made up for it. So if you were irritated and frustrated, you can be exiting now and still be way up for the session. I mean, literally, if I look at that previous position, ended on a $170 loss. Okay, this one has gone up over 800. So most people will be very, very happy with that type of a session, and then be done. You don't even have to continue. You can pause it and be done for the day. But I would wait and see what's happening here, because there's still a decent room for this price to move towards this 50. So we've probably got another 80 ticks of movement in here. So if you were gonna think of when to pause the strategy, I still would only pause the strategy when we've got a bar closed below the 38.2. Yes, you're giving away a lot of profit, but you know, you've got a huge potential of this to go up. And they've already come down and retested that support level. They've already come down and taken out their stops. So there's nothing really stopping them now to run this price up, because they basically fueled their positions to run this price. So obviously all of that I just told you now is completely made up, but it sounds good. So you've got to just run with what you're seeing on the chart. But you've got to try and identify what's happening. But if you're seeing patterns repeat over and over again, you can kind of get a sense of what they're doing and where their levels are that they are acting around. And while this is running, there's nothing stopping you from continually running your optimizations, because you might get a result saying that most of the results now are saying there's a sell signal, and I don't think many would, but you could get to a point now where some of your like all of these are still saying long. See, all the results are saying long, 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 long. So you can continually run this now. And when you start seeing a few of these analyzers telling you, wait a minute, I've entered a sell position, then you can pause your strategy, because then there's a good chance that this run is up. Exactly what happened earlier when we were looking at that running position in the short, when we were way in profit over here of $700-800. The analyzer was coming up with the results saying, we've changed signal to go up. So there could be a similar thing that could happen over here on this chart. It may happen around here that the analyzer has picked up criteria of more of selling action in the market. Well, it's basically going to pick up that everything is lined up, that the price is going to be coming down rather than continuing up. So just monitor that, monitor your analyzer, and just see what that is giving you. So that's something to look at. The price has dropped a good amount of ticks over the last few seconds, but still up quite considerably. They might just be coming down to take out a few more stops so they can run up again. They're never just going to go up continuously. It's just, it doesn't happen. You're always going to have this zigzagging, and it's just all to entice people to exit their positions or sell, or whatever else goes with it. But if this price does struggle in this zone where it is now, you're definitely going to find there's a high chance that the analyzer might even start giving you an advanced warning or giving you an alert that things could be changing. So I'm just going to take off this thing. It's coming. So local and local over here. So there was no strong level there at all that it was in. And the price is coming back to that 38.2 again. Okay, so we're starting getting a hint now of some sell orders. See, sell a few over here. So now you can switch over to your chart, and you can start getting ready to exit this position, especially now that the price is at the 38, and you can just watch what is happening. It might just come and touch it again, or come very close like it just has. Just another test of that level, which looks like it has. So it's come back to the 23.6 and the 38.2, 23.6 and the 38.2. So there's two little Fibonacci levels that it came back to. Again, another little scalping opportunity, perhaps. switching over to your analytical, your optimizer, keep running that, seeing what is coming up. You may even decide to switch your settings to one that is entering more positions in this vicinity. So it, like right over there, it quickly reverted back to the previous settings because it realized that that was a bit of a false breakout, coming back down again, or a false reversal. So it's now, you know, going back to that. So that's why it's important to keep running your optimization, because that's going to give you the current heartbeat of the market. So basically what they did there is they suckered in some more people, you know, who were in long positions, took out their stops, and then ran the price up again. It's just the, you know, the behavior of what they do. You know, another thing you can look at is you can look at your shadow trading on another chart. So here is a 1616 chart. We looked at this a lot yesterday, but you can definitely look at this chart over here. And if you need to refresh it, just do that. So this is your F5 to refresh. So this is going to give you it's going to give you the shadow trading indicator. Now, if you look at the shadow trading indicator, it's showing us divergences on top there. So on the smaller chart, the 1616, there we go. It's showing the strategy actually switched to a sell signal. So on its own, it switched to a sell signal. Let's see. Let's see if that is matching up with what the analyzer is saying. So a little bit of uncertainty around that price over there. That's probably why it's picked up a sell. So even the analyzer is now giving results that we should be in a sell position. So our settings, all of these are saying sell over there. Sell, sell. Now, whether that is going to be good or bad, we will have to wait and see. So even at that exact point where that strategy entered, this is where the analyzer is telling us is a good sell opportunity, a sell position. So this could just mean a rundown in price. I'm not 100% convinced of a drop in price quite yet, purely because I'm just looking at another chart over here. I'm looking at the momentum line. So even though it's very, very far from price, it's kind of a facing upwards, and it's been rising. So at any moment, this could actually start tapering down, which will be absolutely amazing, because then our sell position that we are currently in will be really beneficial. I am fearing, though, that if it breaks above where the price is now, it may enter another long. So let's just hope that this is a temporary rise up from where the price is right now. And this momentum line is going to start giving us a beautiful picture. So we can monitor on this chart. Let's monitor what the shadow trading does on this chart, and just see what is going on here. In fact, what I'm going to do is on my trading chart, I'm going to select short only. I'm just going to select short only, purely because my shadow trading on the smaller term chart is showing that this is a reversal point. Remember, we discovered when we looked at the shadow trading, we looked at these divergences, the momentum line, but we really need this momentum line to change direction and start facing down for this price to really be sucked down again. So often what could happen is this momentum line could come closer to price, closer, and then pulling the price up instead of coming down. So a little bit of a point now where there's still a very high likelihood of this price coming down, but that momentum line really has to start dropping considerably for it to suck the price down. The moment not looking very good. That momentum line is facing up. But it's still kind of a, bouncing around this area over here where it may be struggling. So if we get more divergences over here and this momentum line finally shows in the right direction, we're going to have a nice temporary run down there at least. That's looking more promising. So what can often happen too is you could have these bars consolidating on the top section, with this momentum, with the price action. Come on, my computer's lagging a little bit here. So you could also have a situation where you have got the bars kind of are just bouncing around a specific area, but this momentum line can start facing down, even with those bars consolidating in one area. And that is also a very huge indicator that this price is going to drop sharply. So also by looking at a chart like this, you can also determine when will be a good time to start and pause your strategy. So looking at a few different chart sizes. So even if you use this as the 32 chart that you are trading on as a signal type of a chart, you could have this running. Actually, this one is showing a beautiful, look at this momentum line. Look how it is dropping considerably, but the price is like staying in one area. So very often this could be, the case where this price is going to drop considerably from here because that momentum line is dropping and that those bars are consolidating. I wanted to see that on a smaller chart. This is slightly longer term. It still shows that effect that I was talking about, that price is going to higher highs, but this momentum line is dropping. So this momentum line will show you the true intention of where the price is going to be going. And that's accurate so often. It's accurate more often than not. So I'm just going to switch this to a smaller bar size. So that's why it's good to have a few different bar sizes in play. So that's the 32. I'm going to switch this back to the 1616. So I've got two different sizes of this chart to look at. Come on, 16 and a 16. Okay, so notice how this momentum line is now. We needed to happen a few more bars to be dropping down, but we've kind of reached this point of this multiple divergence over here. Momentum line is still kind of a higher. It's still got this upwards trajectory, even though it's still facing down, but it still had this upwards trajectory. Let's hope that this one now is the start of it actually coming down, which is certainly looking like the case on the longer term chart. So if you were doing 32 bar now and you were entering short positions, so if you've got your if you've got an ATM set up over here, so like a 30-30, and you could enter positions on the hang on. Oh my, I've got a bit of a lag over here. Come on. Shit. So I clicked on something and it's done something. It's jammed me up. So first of all, I would put my stop where the next bar would form. So 32, and I would put a target. So if you were going to scalp this market right now, this is where you would be. All you're doing is trading the top of the bar to the bottom of the bar. That's like 30 ticks worth of a move on that. And then what you got to do is just measure this from here. Your 32 ticks. So I don't know why I've got a bit of a lag here. I don't know. So 33. So that is where your stop would be. So this is like a 50-50 type of a risk reward if you enter a limit order on the top of that bar. Now, I'm not always going to be in the thing. Let's just see what's happening here. Momentum line, not loving the positioning of it. Perhaps a bit too premature on pulling that trigger. Yeah, okay, so a bit too soon on that. So that was the idea behind that. So momentum line, kind of a flattening out, changing direction a little bit, and now switching up. So not the greatest thing happening there. So let's switch to our chart. So the strategy itself now has actually closed because it's shown a signal. And looking at that, the price did indeed just race up to the next Fibonacci level. So perhaps do what I did there when you've got the support of a Fibonacci level behind you. So using a Fibonacci as a bit of a support too for the price coming up and down is probably a better idea to approach that manual setup too. So like we said earlier, a manual trade around a strong Fibonacci level where you're predicting, there's a higher chance of the price going up than it is of coming down below that level. Whereas in this zone over here that we traded in, there's no Fibonacci levels as more support. In fact, where the price is now is a better support at this 50%. Okay, so it's entered. The strategy that we currently have is in a sell at the moment. I've switched it back to both directions. So I've basically just kept the template that we used from the start of the session. So I haven't updated the settings at all. So there's our 32 chart, the one we just entered on, that manual entry. So it's still showing us that this is very likely to be going down. it just went up an extra bar and basically to a new high, which is very close to that that level over there. So it's a good lesson to learn. If you are going to be entering manual positions, do so around the Fibonacci levels. So not just in open space like that. You may get away with one or two being successful. So your success rate will probably be decreased considerably entering like that, as opposed to entering around a stronger level. So I mean, as you can see, a lot of the time the bars do consolidate and start and come back to where they started, highs and lows. It's just probably got a slightly less chance of it happening than entering at a stronger level. So if I was going to enter another position, I would put a limit order. If I was going to enter a short position, I would put a sell limit over there, but not with the 30-30. I want to increase the value over there. It must be at least like a 50-50 that I can actually move it. So entering a position there has got a higher chance of being successful than entering it lower in an area where there's no strong Fibonacci level around. And by placing limit orders, you also are guaranteed at entering a fill at that price. So you're not entering at a at a market order. You're filling at a specific price. And then trading that. I'm just going to refresh this to get the indicator to be plotted just right. So again, I've got a little indicator that we can pop on here, and that is called the tick distance marker. So that's going to tell us how many ticks the price is away from the baseline. So let's just put that in. Quickly, where are you? Tick distance counter. Okay. So the price is right now on that 50% level. Very close to, so I'm trying to see, if it was over there, that was the entry. So the next bar would be up over here, just above the 38. So it'll be over there. Trying to see my entry exactly. Where's this entry? Because we're in a long and a short at the moment, that's why it's coming up as that. But if I had to put this entry in place where it should be, which is over there, there we go. So it's still in that one long position, according to the strategy itself. Okay. Should I mess things up there a little bit because I've got the strategy running as well as a manual position. So that wasn't the best idea to do at the same time. This one is still running. Okay, good. So again, we're at a strong Fibonacci level right now. You could decide to pause a strategy around here. Coming back to our optimization, again, I've just left this setting run since we started. I haven't adjusted it at all. And it's actually had some good running positions. But I'll continue running this optimizer for today's data. that has also showed some really good long running positions. Good. How have you guys been going on the call with your strategies and your optimizations?
I've just been changing between bar sizes, Jason, just seeing what I can best get. And then I've just been following you the last 20 minutes with the old manual trading.
Okay.
I'm actually finding with the manually trading off the signals given from the optimizations is very powerful as well. Plus, I'm running the signal chart with the shadow trader, which is just super powerful.
Okay, great. I'm glad that has worked. So, I mean, this is where it helps to have multiple screens and having a few different things up. I'm trying to put everything on one screen. It's very hard to really focus on it all at the same time. But when you guys are trading on your own, you can have your charts open on different screens. You can really concentrate on what's going on, monitor what's happening with the signal charts or with your charts with the shadow trading to see what is happening on that, because that's going to definitely help you make better decisions. Or you can just have your daily targets set on, and you would have been out. You would have actually been done, you know, even with a $500 target, you would have been done by 9:30. Actually, no, sorry, not 9:30, about 9:45. And if not, then the next move coming up would have got you in.
I'm trading 2 NQ contracts, Jason, and just manually trading using the signals and stuff. I hit my target when I should have stopped about half an hour, and that was like $1,300.
Okay, great. That's good. And that's why that 16-16 chart is really awesome to use, because it's going to give you those nice little swings in price. Even a 12-12, you know, you're going to have that same type of thing too, where you're going to find these swings in price and the price react. So you can have a few different charts in you know, in tabs and switch between them and just see which ones are giving you the best signal. Right now, we've definitely got to bounce off this 50. So the price basically broke through that 38, ran all the way to the 50, and then failed at the 50 and has come down again. So again, you can definitely put in the strategy settings. You've definitely got that option over there to use your daily targets and your daily stops. And as soon as those values are hit, the strategy will pause. So that is pretty cool.
I mean, this situation here, the momentum bar, this should be pulling down, I think, with a sell signal.
Let's have a look. So I'm looking at a few different charts. Let's see what this looks like.
I say that, and then it just starts to curve.
Yeah, I mean, it's still seeming like it's a downwards thing, because that momentum line has definitely shown a huge drop to the downside. And but why you're seeing a bit of up and down at the moment is you see this number over here. It's saying 0.4, 0.008. When that number is 0 and goes below 0, that's when the sellers are in control. So you kind of are on a value right now where it's the battle between the buyers and the sellers. That's why you're getting some gold bars and some green bars. So you kind of have there's more gold bars now than green bars, even though the price has gone up a little bit. So the inclination of this is definitely to drop. So in your long position right now on the strategy, I would definitely be pausing that at this stage. Purely because this is telling me that the sellers are more than likely going to be taking over this price very shortly based on what this momentum line has actually been doing. Now, that's not to say that some institution or bank might say, we're going to push this price up no matter what the hell happens, which is obviously the black swan that comes in at any stage. But the probability is that these levels are generally respected, and unless the price significantly breaks above them, that this price is going to come down. So this definitely is a type of a situation where it's showing a drop in price. And look how far that momentum line is away from the price. You see how this distance of this momentum line? So that often is a huge trigger to tell you that this price is going to be dropping. And because we've got a huge space over here, we've got a huge space of no Fibonacci levels and stuff in play, it's likely to happen. But again, we're right on the cusp. You see, we're right on the cusp of buyers and sellers. We're on that cusp. We're right on it. So there's the buyers a bit in control again. You see, buyers. We've had a few more green bars than gold bars in the very recent times. So you could also wait until the stage where you have a few gold bars in a row, which wouldn't have helped too much over there because it actually bounced up again. But start seeing more gold bars than green bars, and the sellers have really taken control of price. And even if you scroll back on the chart, where that bar closes, wherever this bar closes, that color that it closes at is the color it's going to stay. It's never going to change color afterwards, even if you refresh it. So just looking back at the chart, you can see the coloring of the bars, and you can see when there was another signal on, if you look at this chart in real time, this is how this one would have looked, you see, and it shows you how this momentum line is dropping after a divergence, and you can see how you're starting to see more gold bars coming in over there, and that momentum line is so low down that is just sucking that price down. So that's ideally what you want to be seeing. We kind of are seeing this over here on the top now. If you look at these bars historically at 3 a.m., that's kind of what we are seeing right now on the chart. We're seeing, some gold bars, some green bars, but that momentum line down. So let's scroll to the end again. So now we're seeing more gold bars on the chart. So this is where the sellers have taken more control of the price. Again, they've got to close. We'll see where this bar closes, if it closes in gold or it closes in green. We haven't had a very clear direction of this momentum. It hasn't been straight down like previously, although it's now starting to do that. But very often what can happen is the momentum line can go up. You'll start getting this thing, but then it will start showing this continuous downwards trajectory with very few upwards gaps like that, and that sucks this price. That's when this price is going to drop considerably, and when that happens. So you notice that when the bar closes, wherever that momentum line is, it will stay there. So that's how you can tell, even historically, that angle, that momentum line, how it's changing, that it's going to be in that direction the whole time. So if this had to close with this thing facing significantly up, then you would rather just jump out until you're seeing a definite direction down. See, right on the cusp again, you see how it's going from green to gold. So not as fluid as the previous run down earlier. So if you look at that previous run down that we saw, we were monitoring at 3 o'clock. So notice how this momentum line basically stayed red this whole time. See how it stayed red, and it just sucked this price down. So that obviously is the most powerful signal. Right now, it's currently a little bit undecided, and it's even changed color a few times. So when you're seeing a solid color, if you've changed your color, remember you can go and change the color in your settings, but seeing that solid color running all the way down is a much more powerful signal than even what we're seeing here. It's kind of they haven't got the strength yet to really push this price down very fast. Maybe there's some news or something coming out, or something that they're watching out for before they do it. But yeah, so there we go. So there, our momentum line is now, showing us beautifully. And like I said, it hasn't been a perfectly fluid movement of the momentum line. It's had its ups and downs. But still showing a nice move. So these are the type of moves, taking entries around Fibonacci levels like that, with in combination of the shadow trading, those are the higher probability moves of this, especially when you've got this momentum line deviated from price like it has. Those are your money moves. So, I entered a manual trade over here earlier. It was in no man's land between two levels. So not the smartest thing. I mean, it probably had a 50-50 chance, because all I was trying to do was trade to the bottom of the bar. But this type of setup around the Fibonacci level and the shadow trading, when you have those type of things, you can trade those bars very comfortably. So there's a 32 bar. Right on the Fibonacci level, those would have been beautifully successful ones. There's just a few other charts I'm looking at. The 44. Again, the price went and formed a candle on the 50%. So if you were entering a manual position over there, you trade that price a 44 tick down profit target and a 44 tick up as a stop loss. And there your probability is increasing drastically too, because you are using the Fibonacci level as your support for price, and then you're using no man's land for your target. So your chances are increasing drastically there too. But sometimes it's nice to let this price also run, like right now it's running beautifully. This momentum line is facing down. It's good to see that. So let's switch back to the 32. Let's go back to the 16. So notice how this momentum line is continually going down. We do have an arrow over here. So sometimes these arrows will show a little deviation in price coming down. It will show like a little bounce up of price. But I always like to watch the momentum line to see what that is doing. Because as you can see on the left of the chart, these arrows don't necessarily mean that the price is definitely going to bounce up. Okay, now we've got two of them in play. Momentum lines switch in distance. Well, it's not switching distance, it's switching in angle. So, this could be your, bit of a shorter run. Doesn't necessarily mean that it's over. You can say, well, if the bar closes, back up to where, you started, then that that's over, or you can use the next bar up as a close point. So like where the price is at that bar. So then you basically captured 1 bar's worth of movement. But because this momentum line is still so far away from price, this is more than likely just going to be a small little thing up to take out some stops. We still got gold bars. So the sellers are still in control of this price unless we have a few bars closing green. So as soon as we have a few bars closing green, we know that the buyers have taken over. So a bit of a smaller run, that specific little movement we saw there. And we'll know it's well and truly over if we have more and more bars closing green. Then we know this price is going to run up. So that's what you're seeing all the time on the chart, is the coloring of those bars. And you can see when they've taken over and they've consolidated the price, like even on the left over here, they've consolidated the price in green bars, even though, the momentum line is creeping up to the price anyway. So there they've consolidated, even though we had a stage where the bars were gold, the momentum line sharply switched up and the bars started all turning green, which means the buyers are back in control, and then they ran their price up until this stage now where we're watching it. And we at this stage now. So we've got 2 green bars, we've got 1 confirmed green bar. So we'll see what happens over here. Remember, you still got that strong Fibonacci level ahead of you. So this could just be a bounce off the upper band and then the price coming down. Like I said before, they're not gonna just run the price down. Very likely they're not going to just run it down. They always want to come up and take some stops. So this is where you got to just use a little bit of imagination and look at the bar coloring, seeing what is predominantly the coloring of the bars to tell you who is in control of the price. So there we only had 2 green bars. The price didn't go up and form another green bar up. So the sellers now have taken control of that price again. The last thing you want to do is, the last thing, I've done this a thousand times, and I'm sure everybody on this call is going to do the exact same thing too. But the last thing you want to do is be in a trade and then pause your, get out of your position, and then the price goes and drops anyway. That's just, it happens all the time. So, but I think if you're working around a strong Fibonacci level, maybe have a little bit of room for that trade to move, unless you are literally purely scalping and you only want 4 or 5 points of profit and you're happy with that. But ideally, these type of things can run for extended periods of times, very likely a lot of the time, and they could be running all the way to the next Fibonacci level. So unless if you had another Fibonacci level over here, say for example the 38.2 or one of the other Fibonacci levels was over here, then I would say, okay, definitely jump out of this position because you've hit another Fibonacci level. But when you're getting to the stage of not having Fibonacci levels in the way, and the sellers are in control of the price, I would tend to say leave that to run for a bit. Not that you won't be caught out on occasion, but just from understanding these bars very closely and understanding what happens when these type of signals present, your chance of these running for longer periods of time are definitely there. And it's the same thing going up. It's the same thing going up. As soon as those sellers take over control, like there's another situation over there. Okay, the momentum line was above the price. So that's a tricky one. But seeing the sellers in control. So if you were in a long position, like over here, so here's another signal going on in the upwards direction. You see the momentum line switched above price. You started seeing green bars, green bars, green bars, green bars. The buyers are in control. But now the momentum line is coming back down, coming back down, coming back down. It's now with price, you've got to exit that position because that momentum line is completely switched. So that's how you can work with this indicator. Just keep looking, make sure it's positioned, first of all, correctly. So you're seeing the red line on the far left. And the good thing about this specific indicator is you can scroll back on the chart and look at previous signals, as long as you're not messing with your scaling and stuff. So like over here, we had a brick wall that the price came and bounced off, and a Fibonacci level. So there's your 76 Fibonacci level where the price bounced off. So in that case, if you were in a sell position, that's where you would pause your strategy, because there's a Fibonacci level in the way. We've had a few multiple fails over here though. So I mean, this could be, you know, notice this momentum line. It hasn't continued with that downwards trajectory. It's kind of just consolidated a bit there. So you could also look at that and say, you know, I'm going to draw a box around that. If the price breaks above that box of that zone, then you'll be out. And if it breaks below, I'll be staying in. But you know, this happens all the time where they come down, take out stops, come down, take out stops. But you know, this could also be the reversal point. You can never foretell these things, obviously, because you know you're dealing with thousands and thousands of banks and institutions. So you just got to try and you know, read it as best as you can. And at least with this, the coloring of the bars is a great help in that sense. And of course, these arrows often are very accurate too. And if the indicator kicks out, you just unfortunately just have to refresh it. I don't know why NinjaTrader is doing this on my, you know, why the errors are coming up on this. It worked perfectly on my own PC. This is on the VPS. So I'm using the same assembly that you guys are using on the VPS. And also notice how this momentum line is a free running line. So I drew that box and it moved. But you know, it's a free running line. So as soon as this momentum line comes a lot closer to price, you know that you know, the trend, the run of this is coming to an end. Right now we've got 3 gold bars, 2 confirmed green bars, but at a lower level than the previous 2 green bars. So again, you just watch what's happening with the price over here. And we're coming up anyway to 11, which is normally a huge push in the markets. And that push could be up or down. So they're gonna push that price in a direction. So more green bars now, momentum line facing up. You know, looks like we're not going to catch that run, that nice run down. I still got the strategy running, haven't I? Let me just check. Back to that 50%. So it's given us a heads up even before that price rose up. You know, that this momentum line has changed direction. Seems to be pulling this price up now. So yeah, this happens with the price, especially around Fibonacci levels, strong Fibonacci levels. We're good if we get another divergence error over there. If this is another bounce off that 50%. But coming up to this 11 o'clock, It literally could go any way right now. Yeah, so there we go. So that momentum line has continually faced up the whole time. Hasn't had another dip again. So this is when what can happen is this momentum line can come right back up to price, and it could mean that swing forward. So we've had a break above this 50% and a new high. So a little bit iffy at this stage. So this is how you can tell, this is how you can use the indicator by the bar coloring. And, you can probably save yourself by getting out sooner on positions that are going against you just by keeping a lookout for the bar coloring and this momentum line. So I've had the strategy running. That's why I haven't exited anything of that. Oh, I haven't actually. That was a manual entry. Oh crap! I forgot I had a manual entry in there. Okay, so so I had a manual entry in there. Oh, that's why I got my stops and target. But I'll let this one exit, and then we'll end the call there. But at least it's giving you a representation of what the price is doing, and you can immediately see when the buyers have taken over control, and that's what it's doing. So there we go. Okay, so how did you guys go with your manual trading? Did you enter some positions and you were good?
Yeah, Jason, as I said, I basically $1,100 up for the day, manually trading, looking at the strategy and just taking the trades off the Fibonacci levels and the indicating from the strategy.
Okay, magic. Okay, great. I'll leave it there. Let me just exit this. And I got a message. I didn't see that. That's fine. Okay, guys, thank you so much for being on the call. And we'll basically be on tomorrow at the same time and go from there. Okay.
Thank you, Jason.
Yeah,
Thank you.
thanks for your time, Jason. Good night, everybody.
Okay, guys.
Bye-bye. Good night.